Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the hourly price chart for Apple Incorporated, stock ticker AAPL. So as we can see here, the stock continues to trade quite heavily. Share prices are starting to sort of focus on prior support levels, which came in, let's get an exact number here, which came in at the July 25th low of 214.64. So currently, we're trading a few dollars above there, roughly $3 above there. But there's a lot of downside selling pressure that's currently, running through the market. And most of this action has been focused on the technology space. So, it does stand to reason that Apple would be trading under pressure, given the fact that, we recently hit all-time highs in the stock. This would have come during the July 15 trading session. At 237.21. So, overall here, we are kind of taking stair steps down after periods of consolidation. We can kind of zoom in here and see that a bit better. So, here's the all-time high. We can see that the all-time high is posted. And then we take sort of a fairly significant decline here below 230. And then there is a period of sideways consolidation. This was a bit of a period of indecision in the market. If there was going to be a rally, this would have been the chance for it to happen. But the broader sell-off, has just been way too powerful. I mean, we've seen it in essentially every major technology stock. So this is not an Apple-specific story by any means. We're seeing similar declines in Microsoft and Nvidia. So the selling pressure here has been broad-based. So it's not as if there was a terrible negative news piece or something like that, which is forcing Apple share prices to move lower. Currently, what we're seeing here is the fact that the stock itself is having a lot of trouble moving through its exponential moving averages. This is the hourly chart. So as we can see here, this most recent failure or resistance area is occurring as the stock is moving into its 20-hour exponential moving average. That would be the yellow line here. So, this does form the most recent resistance level. This would be roughly the $220 mark. We did trade to highs of 220.85. So this would be the next level to watch to the top side. We would see a bit of a break in the selling pressure if we were able to break above that level. But the real question here is whether or not we're going to fall through these prior lows, which came in at 214.64. So we do have a bit of a sideways trading range at the moment. But most of the evidence here is still pointed in the downside direction, because the current readings in the relative strength index continue to suggest negative momentum readings are in place. As we can see here, this purple line at the bottom of the chart is showing a bearish condition here, a bearish trend in trading momentum. So this really does suggest that we're going to see prices fall through this 214 support level. In addition to that, we have to kind of take note of the fact that this prior sideways consolidation period did occur at the 61.8% Fibonacci retracement of this dominant trending move. If we're kind of looking at the prior lows, which came in at 207.11, and then extend those lows to the all-time high, just above 237, we can see that this area here does mark the 618 Fibonacci retracement of that dominant move. So, we have convincingly fallen below here at this point. We have broken through this level on an hourly basis on the hourly charts. So, this is a confirmed break to the downside. And from a Fibonacci perspective, this does suggest that the next level of support would not be seen until roughly 213.30. So it would be a bit of a decline here, a bit of a further decline here. So, overall, this is starting to look like we could see a full retracement of this move. I do think that a lot of this is going to depend on broader activity in the market. If we start to see some rallies happen in some of these other stocks, it might be easier for Apple to start to gain some traction. But we would probably need to see some broad-based buying in order to start to get more encouraging. In order for things to start to look more encouraging. And we would probably also need to see some trading volumes that do indicate better buying activity in the market. Currently, as we can see here, these trading bars are mostly red. Like the largest recent trading volume bars are clearly bearish. So this does suggest that people are exiting the market. There probably are a lot of people that are still trying to take some profits while they're there. Because we have to remember here, this is from the historical perspective. This is still quite an elevated level here. If we kind of pull out here, these declines start to look much smaller, and there are probably many people that are currently active in the market that are just trying to capture some gains and prevent themselves from encountering further losses if we do continue to see selling pressure within the technology space. So if we looking at things in this light from this perspective, these more recent declines probably don't seem as significant. But this selling pressure has really been in place for about the past 2 weeks. So it's not surprising to see people that are starting to possibly get nervous, probably don't want to lose some of the gains that have already been captured during this sizable run higher. And this does help to sort of explain why all this selling pressure is occurring and why there is an increase here in negative trading volumes. So currently, since we have broken through this 618 retracement, the next level to watch on the downside would come in at this 78.6% retracement, which as I said is just above the 213 mark. From there, if we were to break below there, this would eventually then target a full retracement of this entire move and likely send us right back into the 206 or 207 level. So here's the current market analysis for Apple Incorporated, stock ticker AAPL.